Let's jump right in. It is November 7th, 2025, and there is a real tension building in the markets this morning. So we're going to break down the key forces at play.
So here's the core story today. It's a classic market tug of war. We've got two major currencies getting pulled down, while at the same time a key commodity, oil, is pulling in the complete opposite direction. This is the central conflict that's creating both risk and, opportunity for the whole trading day.
And here's exactly what that imbalance looks like. On one side of the scale, you've got the euro and the British pound. They're just weighed down, looking really weak. And on the other side, the US dollar, which is basically acting like a magnet for capital right now. This simple dynamic, well, it's the engine driving today's most important moves.
Okay, so let's start with those currencies. What is actually behind all this pressure on the euro and the pound? Let's take a closer look.
It really boils down to two main things. First, traders are kind of playing it safe. They're jumping into the US dollar ahead of some really important economic data releases. Second, and this is specific to the pound, the Bank of England has been sending out these cautious signals, hinting that they might ease up a bit. And that's just adding extra weight to the currency.
For the euro versus the dollar, this is the number to watch, 1.1500. You got to think of it as a crucial line in the sand. The fact that the euro is struggling just to stay above this level, well, it tells you everything you need to know. The bears are in control for now.
And you know what? It's a pretty similar story for the British pound, just with a different number on the map. In this case, the market is setting its sights on 1.2900. This is the next major psychological floor that sellers are really aiming for.
But while the currency markets are all about weakness, there's a completely different story playing out in commodities. So let's shift our focus to oil because it looks like it's searching for a chance to bounce back.
Now, before we look at oil's key number, we all need to understand this concept, strong support. What is it? Essentially, it's a price floor. It's a level where a falling price often finds a ton of buyers who are ready to step in, stop the decline, and sometimes even reverse it.
And for Brent oil, that floor is right here, $86.50. After a pretty steady decline, the price has hit this critical support zone. This is where we expect the buyers to show up, which makes it a real hot spot for a potential reversal. Okay, so we've got the analysis down. We have weak currencies over here and a commodity testing a key support level over there, which of course brings us to the most important question of the day. How do we turn all this information into a strategy we can actually use? Let's lay out the day's trading plan and focus on the two clearest opportunities we can see.
So here's the game plan in a nutshell. For the euro versus the dollar, the strategy is to look for short opportunities. That is, betting on it to fall further, especially if it tests that resistance zone around 1.1500. On the flip side, for Brent oil, the plan is to watch for long positions, betting on a rise as it finds its footing near that 86.50 support level.
And that brings us to the single most important piece of advice for today. No matter which opportunity you're looking at, discipline is everything. You have to stay patient. The volatility that's coming, it's actually going to help provide cleaner entries. The US session will likely shake things up, creating better moments to act. So stay sharp and trade smart.